All right, welcome back, everybody, to Power Lunch. Regional bank shares under some pressure as higher for longer interest rates and commercial real estate challenges weigh on the sector. The S&P Regional Banking ETF, the KRE, is down nearly 10% this year, and earlier this month, Moody's put 6 banks on its downgrade review list over commercial real estate exposure. Let's bring in Brent Beardall, President and CEO of WaFd Bank, which is one of the banks on that Moody's list. Brent, welcome. Good to have you with us.
Good to be back, Tyler. Thank you.
Let's talk a little bit about your commercial real estate loan exposure. I note that I believe it was last week you closed on the sale of $3 billion in commercial real estate loans to PIMCO. But I also note, we'll show a chart here, that among a group of, I think it's 4 mid-sized banks, you still have 45% of gross loans, so according to our information, in commercial real estate. I assume the sale was to bring that percentage down.
It certainly was, and as you know, I've been telling the world for a long time that the fears in commercial real estate are overblown, in my opinion. I like to tell people I'm out on a mission to kill Chicken Little that say the sky is falling, because that simply is not happening in our point of view. And it's easy to talk, but now we have substance. The transaction we closed last week was the largest sale of commercial real estate ever to one of the most sophisticated buyers in the world, PIMCO. And really, they saw no credit mark, so we were able to sell that $3 billion portfolio at no loss.
So you were selling basically at, I don't know, at par is the way to put it, but you were selling at a good price. You were not selling a distressed asset. And of course, commercial real estate loan, but back to the point, you do want to reduce your commercial real estate exposure?
Well, I wanted to prove to the market the liquidity there. Everybody says they see these, office sales in cities that are at 30, 40 cents on the dollar. Then they conflate that with multifamily and other categories of commercial real estate. And that's wrong, in my opinion. You need to understand the category of commercial real estate and the amount of equity in the deals. So to have a third party come in and look at our portfolio and really say, it is of the highest quality and we're going to be able to sell it at no loss to WaFd, that gives us options. So in the short term, that takes our commercial real estate down, as you point out, but it gives us options. We can relever and go back into more commercial real estate loans. We can pay down debt, or we can repurchase our shares.
These were largely residential loans, am I right?
They were apartment loans.
Apartment loans, multifamily residential, multifamily residential. Let's talk about the Moody's credit watch issue. Does that concern you? How do you feel when you get news like that?
It's hard not to get defensive. I have a great deal of respect for Moody's and the job that they're doing, but I think they're looking out in aggregate over the entire country. And as you know, real estate is local. You have to understand the location, you have to understand the category, as well as the amount of equity the borrowers have in that. So I've had several long discussions with Moody's, and put it this way, I see the world differently.
I had a feeling they had stepped on a live one, Brent. So spin this forward for us about 12 months' time. What position do you think the bank's going to be in and the broader economy?
I look forward to proving Moody's wrong, quite frankly. I don't see a large amount of losses coming in our commercial real estate portfolio at all. The naysayers have been saying the losses are coming, the losses are coming, the losses are coming. And clearly there are some asset classes that are weak. Office in large metropolitan areas, that's an issue. But for us, office is only 4% of our portfolio. And today, as we sit here having this conversation, we don't have a single delinquency. And we have, it's estimated to be 35% equity in those deals. So it's a mistake to paint everyone with the same brush.